Welcome to Yankees' big, hairy, bold predictions for 2019. Hey everyone, thank you so much for watching Yankee Stacking. Now, before I get diving in on this, let me give the requisite caveats. So, number one, I am not a financial advisor, so do not invest or purchase anything based on my opinion. Please, do your own research. Be very careful with what you do with your hard-earned money. Number two, I am wrong. Actually, quite a bit. Just ask Mrs. Yankee Stacking if you doubt that. But more specifically, case in point, I predicted last year a possible low of $12 an ounce for silver. I predicted that back when we were just below $17. I hadn't even launched my channel yet. I commented in a couple other streams, one of which I think was Sal's. I really thought that we could touch 12. We hit an intraday low of $13.95. So yeah, I can be wrong quite a bit. Number three, I think it's important to say that I am not a Trump basher, okay? I might be touching on, well, I will be touching on a few things related to Trump and the Fed, and I want to make sure you realize that I'm not jumping or piling on Trump. I am a registered independent. I have libertarian leanings, and I love some of what Trump has done. There's some great stuff he's doing, but fiscally, I've been very disappointed. So let me just say that, and those are the things I wanted to get out on the table right away. So my first prediction is a recession for 2019. You know, amidst the clamor of everything is awesome, a growing chorus is starting to talk about sometime in 2020 we could have a recession. I think that's a year late. You know, I think we are definitely overdue, at least from a traditional business cycle perspective. However, I think it's more of a function of a debt cycle than a traditional business cycle. We're in a massive debt bubble, guys, whether it be with our government, with corporations, personal debt. It's insane. And I've shared this in my Instagram posts, some of my YouTube posts. Debt is the enemy, and we cannot rely anymore on a Ponzi-type debt-driven economy forever. We can't. You know, remember what Trump said back when he was a candidate? I think it was on MSNBC, Morning Joe. It was 2 days after he announced his candidacy in 2015. That's when it was. He said, and I quote, "We have a big fat bubble coming up. You watch. We have artificially induced low interest rates." Well, guess what? He was totally right. The Federal Reserve zero interest rate policy, or ZIRP as they called it, has really made us drunk on cheap money. And that's what's propped up our stock market, guys. It's the corporate stock buybacks. It's having, retirees who can't get a decent interest rate for their money, or anybody by that, token who is saving their money. They have to gamble it in the stock market. There is a big push to invest in the market. It's everything. In fact, we kind of equate now the U.S. economy with how the stock market's going. That wasn't always the case. When Yankee was younger, the stock market was a key indicator of how well our economy was going. But right now, it is the economy, and that's dangerous. You know, the Fed, try as they might, can't unravel the toxic debt that they absorbed during the Great Recession. And they can't even raise interest rates past the federal inflation numbers, as bogus as they may be, without markets tumbling. I mean, guys, that means it's net zero with our currency. Zero. So I just think that recession is going to occur this year. I've even thought about stagflation being a possibility, but I don't think that's coming quite yet. And by the way, stagflation, for those of you who've never experienced it or don't know what that is, it's persistent high inflation combined with very high unemployment, and it just stagnates our economy. So that we haven't seen that since the 70s. My second prediction: no rate hikes by the Fed in 2019. Now, this is big and hairy because they've got multiple chances to do it, 4 times, right? They meet. They've already reduced it from a possible 4 rate hikes to 2 rate hikes. And I heard that, or it's rumored that Trump's advisors are strongly suggesting that Trump meet with Jerome Powell, head of the Fed. I think he's going to do it in the next couple of weeks. And I think he's going to read him the Riot Act. I think those 4 to 2 rate hikes are going to go to 0. I don't think they're going to raise it. Not at all. Starting in March. Remember again what candidate Trump said to CNBC back in, I think it was like sometime in September of 2016. He was a candidate. He said, "The interest rates are kept down by President Obama. I have no doubt that that's the reason they're being kept down. I used to hope that the Fed was independent, and the Fed is obviously not independent. It's obviously not even close to being independent." Yeah, he was right. Again, I don't believe it's independent at all. I don't believe it's data-driven. They claim to be data-driven, but I don't think so. The data has been disproportionately bad for years. We all know that Trump is a real estate guy, right? He loves debt. In September, he said basically, quote, "I'm a low interest rate person." I hate to tell you. Well, yeah, he is a low interest rate guy. And I think in March, they're not going to hike. And you know what I think will happen then? The markets will love that. They may even love it in February as the news starts to leak out that there won't be a rate hike in March. And so that leads me to my third prediction around precious metals. And I'm going to group both silver and gold in this prediction. I think that silver and gold will drop in price in the first quarter of 2019. I think it's going to drop ahead of a change in direction for the Fed. I think the dollar will strengthen when people start to see a more dovish Federal Reserve. And I'm guessing that we may see silver in the 14s again. And I think gold might go below 1250. Might even hit 12, but I'm just going to stay with 1250. So, yeah, I think in the first quarter we're going to see a drop. But I think it's going to be short-lived. I think by the summer, the markets are going to plummet. And that's going to cause the Fed to respond with rate drops. And they don't have much to cut. We're talking just over 2%. It takes a lot to stimulate the economy. Just look at what Greenspan had to do back with the dot-com bust. He had to drop it from 6% down to 1%. And Ben Bernanke, he had to go from 5% or just over to 0 during the Great Recession. That's a lot of drop. They don't have that in their arsenal. So I think by end of year, silver could hit 19, just like it did back in 2016. And gold, man, I'm thinking it could hit 1400 like it did way back in 2011. Yeah. So you must be thinking right about now, so Yankee, what are you going to do in response to your bold, brash, hairy predictions? Well, I'm going to keep dollar cost averaging with monthly purchases of primarily silver. If you remember in a prior video on the 1st of January, I told you I was going to go for about 200 ounces of silver this year and about 3/4 ounces of gold. So I'm going to still do that. However, I am going to watch carefully in the next 2 months to see if what I'm predicting with the Fed comes true. If I hear dovish talk coming out of the Fed, like I predict, I'm going to maybe hold off on some purchases just for a few weeks, just to let that price in precious metals drop. But we'll see. I expect that I'll probably either be praised somewhat or pilloried by the end of the year if I'm wrong. But hey, this is fun. Do not take my advice as financial advice and, start trading or purchasing based on it. Well, that's it. I'm sure I'm going to get some interesting comments below, but I welcome it. Thank you so much for listening. And as always, I hope your day is a